welcome to the deep dive. Today, we're cracking open a stack of documentation provided by one of you, a listener, curious about the inner workings of a specific piece of software, loan servicing soft.
Yeah, we've got quite the collection here. User guides, setup manuals, feature docs.
It really covers the gamut, doesn't it? Everything from basic setup to the real nitty-gritty compliance stuff, advanced configurations.
Definitely.
So our mission in this deep dive, we're going to sift through all this, pull out the key takeaways, figure out the core functions, and maybe uncover some surprising bits that give you a shortcut to understanding this system.
Absolutely. And with specialized software docs like these, it's easy to get lost in the how-to clicks.
Right.
We want to focus on the why. Why this feature? Why this configuration? What does it really enable? Looking for those practical functions.
Okay, let's jump right in then. Foundational stuff. When you think loan servicing software, what are the absolute must-haves?
Well, it's got to be the loans themselves and the people involved, right?
Exactly. That's the starting point. The sources show the system really revolves around the loan object.
Yeah, think of that as the master record for every single loan.
And it seems super dynamic based on these docs. It follows the loan through its whole life application.
Underwriting, approved, then active when the payments actually start.
But it also handles the tough stuff with special statuses, collection, bankruptcy, foreclosure.
Right. And what seems powerful is the control you have at the individual loan level. Most settings live right there.
So you're not stuck with one size fits all. You can have lots of different loan types behaving differently.
Precisely. It allows for that portfolio diversity.
Okay, so loans.
Yeah.
And then the people, the contacts. It's not just borrowers, is it?
Nope. It manages all contacts. Borrowers, sure, but also lenders and vendors. They're categorized.
And the smart thing seems to be that contacts are managed separately from loans.
Yeah, that gives you flexibility. A single contact can link to multiple loans. So borrower has 3 loans, changes their address.
You update it once. Done.
Big time saver. But the docs also say if you need loan-specific info for the same person, you can create separate contact records.
Okay, so options for edge cases.
And the contact records themselves. Pretty detailed. Multiple addresses, one marked primary, of course.
Custom fields too, right? UDFs, classifications. We'll probably get back to those.
Definitely. Plus ACH info, logs for notes and documents, even their trust account balance in real time if they have one, and a full audit trail.
Nice. And just quickly looping back to loan statuses, I saw you can customize the names, color code them.
Yeah, and even set up little pop-up messages. Like if a loan's in collections, a specific message appears when you try to process a payment.
Huh. Little workflow helpers.
It's those small configuration points that show it's adaptable, not just a rigid system.
Okay, core structure. Loans, contacts. Makes sense. Now the money, how it moves, payment processing, obviously huge.
It is. Basic entry seems straightforward through an enter transaction menu, but the docs highlight some complexities.
Like odd days interest, I saw that term.
Yeah, that's when, say, a loan funds mid-month, but the first payment is set for the first of the next month to keep things consistent.
Right, that gap.
The system calculates the interest for those odd days automatically, which is handy.
But you're not stuck with the calculation.
No, that's the key. You can manually change it or even waive it completely. Just enter 0. Important control there.
And digging deeper, there are system-wide settings for this, like how many decimals or using actual days versus a 30-day month.
Exactly. That level of detail shows they've really thought about different calculation needs.
Okay. What about handling, messy payments, partials, overpayments?
That's where unapplied funds comes in. It's like a holding account.
So you can take a partial payment, stick it in this unapplied ledger.
Right. Or an overpayment, or maybe one check covering multiple things. Hold it there until you have the full scheduled amount, or apply it later. You can even pay out of it for refunds.
That sounds incredibly useful for real-world scenarios.
It is. And when you do apply a payment, the system follows a specific order, right? The payment distribution waterfall.
Yeah, how it decides what gets paid, first, fees, interest, principal.
The system has defaults, often based on the loan's interest type. But here's the kicker. It's highly configurable.
Meaning you can change that order.
Yep. Globally for your whole setup, or you can override it for specific individual loans. That's granular control, especially vital for non-standard stuff or partial payments.
Control is key there. Okay, what about fees? The sources mentioned different types.
They did. You've got your late fees can be auto-assessed, but also easily waived.
Standard.
NSF fees, that's an option when you have to reverse a payment. And then general loan fees.
Which are manually added.
Right. And for those, you can mark them as bill add it to what's due now or defer it, maybe till payoff. You can forgive them too. And you can set who actually gets the fee money when it's collected.
Ah, so it might go to the servicer or maybe pass through to an investor.
Could be. And you can set up templates for common fee types in the configuration area to speed things up.
Configurability again. What about handling lots of payments at once?
They touch on batch payment processing. General CSV imports apparently only need loan number and amount, which is minimal, and specific lockbox processing workflows too.
Okay, so from individual transactions, let's zoom out. The bigger financial picture, investors, accounting links.
Right, lenders or investors. They're set up as contacts, like we discussed, with their details, ACH info for payouts.
And here's where I saw something really interesting, assigning multiple lenders to one loan.
Yes, and it goes further. Unlimited ownership periods, so you can track who owned what percentage or dollar amount during specific date ranges.
Yeah.
And it supports fractionalized ownership too, split by dollars or percent.
That fractional ownership piece,
Yeah.
that's a pretty major feature for complex deals.
Definitely. The docs also mention the system pops up tasks on your dashboard, the My Control panel, when lender checks are ready to print. Helps manage that workflow.
Managing all that money movement, reconciliation must be absolutely vital.
Critical. The sources frame it as balancing the system's internal trust account ledgers against your actual bank statement.
And it sounds strict, month by month.
Very strict. Once a month is reconciled, it's locked, a closed period, no edits, no deletes in there. Essential for audit trails.
Makes sense.
And you have to print any outstanding checks dated before that period ends before you can reconcile. The system actually grays out the reconcile button until the system balance perfectly matches your entered bank balance. Zero difference allowed.
That's a serious control point, built-in integrity check.
Clearly designed that way. They also detail a GL interface, specifically mentioning QuickBooks.
So it talks to accounting software.
It can export journal entries as an IFF file. That's Intuit Interchange format. You import that into QuickBooks Pro.
But you have to set up the connections first?
Yeah, you map the system's internal GL accounts, different types of income, principal, fees to your specific QuickBooks account numbers. And you can map multiple system buckets to one QB account if you want.
Okay, so group different fee types into one income account in QuickBooks, for example.
Exactly. And they mention servicing fees are usually handled accrual style in this interface. Booked when payment comes in, expense recognized when the check to the lender is cut. Oh, and this GL integration is noted as an add-on feature.
Good to know. Now, there was one concept that seemed really specific. Earned and unearned principal.
Ah, right. This is specifically for when you acquire a loan at a discount to its face value.
Okay.
The system helps you track with each payment received how much of that principal repayment is considered earned income, which could be taxable, versus the part that's still unearned.
How do you set that up? Sounds complicated.
Actually, pretty simple according to the docs. You just enter the discounted purchase price as a percentage on that specific loan record.
And the system handles the tracking.
Yep. Provides specific reports. Unearned principal report, earned principal transactions, and earned principal in period. They do note a limitation, though, works for regular term loans, not lines of credit.
Interesting. A niche accounting need, but it's covered.
Shows depth.
Okay, shifting gears. Compliance and reporting. Critical area. The docs spend time on California regulations specifically.
Yes, BRA reporting deadlines, Bureau of Real Estate, they list the forms, 852, 855, 856, the quarterly trust account stuff. Specific due dates mentioned April 30th, July 31st, October 31st.
And annual reports, too.
Yeah, annual business activity, annual trust account review, due 90 days after your fiscal year end.
They also mentioned the California Investor Questionnaire, Form 870.
Right, that came in back in 2013 from Senate Bill 978. For trust deed investors.
And the software helps track that.
Seems so. Fields to track if you've got the form, and a report to manage it. The docs even post some general guidelines from the CA code itself, like investment concentration limits for investors and those statutory LTV limits for different property types.
Like 80% for owner-occupied single-family, 75% non-owner-occupied, 65% commercial.
Those kinds of specifics. But, and this is important, the docs repeatedly say, talk to your lawyer or compliance expert. Don't rely solely on the software documentation for legal interpretation.
Absolutely essential disclaimer. Okay, another big one. HMBA, Home Mortgage Disclosure Act.
Yep. collecting data on real estate loan applications. Key point they highlight. Since 2018, this includes business purpose loans too, if they're secured by real estate.
And you have to file the LAR loan application register.
Annually, to the CFPB by March 1st, covering the prior year's data.
The documentation seemed pretty helpful on where to enter this data in the software.
It did. Pointed to the Borrowers tab for demographics, Collateral tab for property info, a specific CFPB HMDA tab under loan terms, even some setup and servicing companies config.
But again, the caveat.
Exactly. Check CFPB resources. Consult an attorney. HMDA rules are complex. Exceptions exist. Don't guess.
Sound advice. Beyond the specifics, what about general reporting?
The system uses Microsoft SQL Server Report Builder 2.0. That's the tool for creating and editing reports.
So if you know Report Builder,
you can customize existing reports or build completely new ones from scratch. Adding new ones happens via a reports manager in the control panel. Editing involves exporting the report file, changing it in Report Builder, then replacing the old one.
and there was a crucial warning about editing.
Ah, yes. You have to check the skip on update box for any report you modify.
Otherwise,
Otherwise, the next software update could just wipe out your custom version and replace it with the default. You'd lose your work.
ouch. Good tip. And you can make a favorites list of reports you use often.
Yeah, simple usability feature, but helpful.
Okay, last reporting piece, tax time, 1098s and 1099s.
Right. Mailing deadline, Jan 31st. For borrower 1098s, mortgage interest, you generate them, check the tax IDs, addresses, options to exclude loans below reporting thresholds.
How does it figure out box 6, the points?
Based on the docs, property address has to match borrower address, loan funded in the tax year, and the amount comes from specific fields on the closing cost tab.
Printing options.
Plain paper or pre-printed IRS forms, but they state if you issue more than 10 forms total, combined 1098s and 1099s, or if you use plain paper, you must file electronically with the IRS.
How does the system handle e-filing?
It generates a specific export file. You then send that file to their support team, and they handle the actual submission. Deadline's usually March 31st, but they recommend sending it earlier.
And investor 1099s, similar process.
Pretty similar. For 1099 INT, interest paid, they recommend using a net income report type. That calculates interest after deducting servicing fees. And again, options to exclude specific investors if needed.
Okay, let's switch to the tech side, getting this system actually installed and set up.
Standard stuff for the client install on workstations. Needs .NET Framework, Windows installer. Then you activate with keys from the vendor.
But the heart is the database server, right? SQL server.
Exactly. They recommend SQL Server 2008 R2 Express with tools for smaller setups. Lists prerequisites like .NET, PowerShell.
And some crucial post-install steps, things that are easy to miss.
Very easy to miss, but critical. Enabling the TCP/IP protocol in SQL Server Configuration Manager, and adding firewall exceptions on the server for the SQL Server service and the SQL Browser service.
Without those,
Clients can't connect to the database. Game over before you start.
highlights the need for careful setup. The system requirements docs mentioned, hardware needs vary.
Yeah, depends on database size, number of users. That determines if the free SQL Express is enough or if you need the paid standard version.
Express for smaller scale, standard as you grow.
That's the general idea. They also talk about different implementation methods. Standalone, where each PC hits the database directly.
Versus terminal services, using remote desktop.
Right. And the docs seem to strongly favor terminal services, especially once you have more than, say, a handful of users.
Why is that?
Easier upgrades, just update the server. Potentially lower TCO than upgrading lots of individual workstations. And much easier, more secure remote access for users.
Makes sense. And they also offer cloud hosting.
Yep, as an optional service, delivered via Microsoft RDC. Basically, they handle the infrastructure upgrades, backups, access, reducing your internal IT load.
Offloading the headache. Okay, back to customization. We mentioned UDF's user-defined fields. How are they made?
In the control panel, you define the label user C at the data type text, number, date, list, etc., and give it a unique code. Then they're available to add to loan or contact screens.
And you can actually rearrange the screens. Put the fields you use most up front.
Yeah, that's a nice touch. Drag and drop fields, including your custom UDFs, to customize the layout so key info is right there, no scrolling needed.
Tailoring the interface. Good. What about email? Templates.
You set up your outgoing email server, then create templates. Unlimited templates can clone existing ones. And there's a batch wizard for sending mass emails based on a list, huge for statements or notices.
And DocuSign integration for e-signatures.
Yeah, you need your own DocuSign account first with your templates defined there. Then you enable the integration in LSS, map your DocuSign templates to LSS entities like this template goes with the loan, this one with the borrower.
And then you can send documents for signature right from the software.
Exactly. There's a wizard. It pulls recipient info from LSS data. You can review, adjust, then send the envelope off.
Streamlines that process. How about controlling who can do what? Security.
Role-based security. You create user groups, processors, admins, whatever you need. Assign permissions to each group, what menus they see, what data they can change.
And then put users into those groups.
Right. Users inherit permissions from all groups they're in. Default groups like administrators, checks, collections are included to start.
And task assignment. Routing work.
Yeah, specific tasks like print this check or review this loan can be assigned to users or groups. They show up on their My Control Panel dashboard. Simple workflow management.
Keeps things from falling through the cracks. Okay, we've hit the main stuff, but the sources had some, well, niche uses and tips for handling old data.
Right, like the auxiliary account setup. For internal stuff, bank fees, balancing items not tied to a loan.
And the method was kind of surprising.
Definitely quirky. You create a dummy canceled loan, literally name something like Z adjustment.
With dummy borrowers and lenders, too. Z borrower, Z lender.
Exactly, all marked as canceled. You then process internal adjustments by making payments or transactions against this dummy Z adjustment loan. It's a creative workaround using the core transaction engine.
Wow. Okay. Another sort of unexpected use was managing rent.
Yeah, shows flexibility. You set up a rental agreement as if it's a loan, use a special rent interest method, zero funded amount. Renter is the borrower.
And the rent payments go where?
Configured to go to a vendor, the landlord, or property manager, so you're mapping rental concepts onto the loan structure. Adaptable, if a bit counterintuitive.
And finally, history recreation. Migrating from an old system.
Crucial process. The docs stress that LSS starts its own calculations from the import date forward. So the data just before that date, especially the last payment in the old system, is absolutely vital. That's the starting point for the new system.
How do you get that starting point right?
They describe a balance forward technique, create a $0 transaction, then edit it to plug in the correct principal balance and the correct next due date from the old system's final state.
And there was a month-to-month process approach mentioned too.
Yes, likely a more detailed method. They also note you can mark loans as imported during setup, record the old account number, and import date for reference. Good for audit trails.
Well, we have certainly covered a lot of ground in this documentation.
We really have, from the basics of loans and contacts through money movement, compliance like CABRE and HMDA, technical setup, customization.
And even those unique uses like Z adjustments and rent management.
What consistently comes through is the sheer depth and configurability. This system seems designed to handle a very wide range of servicing scenarios, often in quite specific, tailored ways.
Yeah, the level of detail is impressive.
And understanding why you configure things a certain way, why the payment waterfall matters, why the adjustment works like that, it's fundamental to actually using a system like this effectively. It's not just button clicks.
Right. It's about grasping the underlying logic to manage finances correctly and meet those compliance rules.
Exactly.
So this deep dive, using the materials you shared, hopefully gives you a really solid overview, a head start on understanding the capabilities and maybe some of the complexities of loan servicing soft.
We pulled out the core functions and some of those crucial configuration insights.
So here's a final thought to leave you with. Considering the level of detail, maybe some of those unconventional methods we found, like that Z adjustment account, how does understanding the why behind these setups actually change how you'd use or troubleshoot a complex system like this versus just following a manual click by click? Does knowing the underlying structure unlock a different level of effectiveness?
Something to definitely ponder.
Thanks for joining us for this deep dive.